Okay, this is a video about stock prices and getting stock prices and analyzing them. Now, I think one of the most important files on the website is this thing called the comprehensive stock price analysis that allows you to do all sorts of things. It allows you to I'm going down, don't worry, I'm going back up to all these. It allows you to kind of compare different stocks and compare them against economic series. It allows you, where am I? Oh, shoot. God damn. It allows you to, and I'm not starting over here. This one is Apple, L&G, some insurance companies, or some other stocks. You can compare to some stock economic. You can compare to the GDP. You can do all sorts of things. Here's Amazon versus Apple. Here's, just a minute, let's go. Here's GE versus the index for a different time period with betas. Here's the S&P index versus the oil price. Here's the GDP index versus the stock index. Okay, you can make your own conclusions on all that. So in this one, I'm going to I think it's pretty cool that you can do this. And nobody seems to give one crap about it, even though I made some other videos about it. And the reason I know that is because the whole thing kind of didn't work and nobody complained about it. So here's what I want you to do. I hope you might try this. And if you do, and if it doesn't work, can you please send me an email and say, God darn it, your stupid thing doesn't work. So I'm making a really simple case. That's what I'm trying to do. And I'm going to start from scratch and just walk through how to use it. Now, if you go and download this file right here. Oh, shoot. Don't make any noise, damn it. God, I'm making a video. Jeez. Okay, and if you, now I'm off track even. Now, if you download this file, okay, here's what you get. All right, now, when you do this, I left everything blank. This is got nothing in it. Nothing. No stock prices, no commodity prices, no economic series, no nothing. Okay, and I'm going to walk through one by one what you do. Now, when you start this file, I guess what I'm going to have to do is go to the developer and go to auto open, because that's the thing that opens. When you open, you get this funny looking message, and it says you've got to have this thing called WinHTTP Services 5.1 installed. And if you haven't installed it yet, here's what you need to do. You can go to View if you don't have the Developer tab. I'll assume you don't have the Developer tab, which most of you do. And then you go to Macros, and you can just edit any macro. I'll edit the one I was just on. And then you go to Tools, and then you go to References. And then you've got to make absolutely sure that this thing right here is clicked. And then you press OK. Is that really that hard? Is that going to make you not do things? Because I'm kind of afraid of this myself. When I read this, I was kind of afraid. Oh no, is it still going to work? Now, so what I'm going to do, and if I go back to my website here, I tried to put that kind of describe what we just did. So now we're going to start entering data. Now, it shouldn't be that hard. I'm not going to get into the technical details. So we're going to enter some data for an index from Yahoo, an index from Federal Reserve Economic Database. We're going to enter a couple of exchange rates and some economic data. We're going to end up enter some commodity price, some Yahoo stocks. I'm going to do that one at a time show you that this is not that bad. It shouldn't be that intimidating. So I'm going to start with this. Now, the first thing I better do is resave this file. I'll save this, and I'm going to resave it over something I've already done. I called it monthly analysis small. I'll even put this file on the website. Okay, so let's say I want to get get some more of the, I'm getting the S&P 500, and I'm going to put a little description of that as US S&P 500, and we'll see why. And then I'm also going to get the DAX. Now, all of these things here, these are just the painful stuff. That this was the real pain, to go down and go into finance.yahoo.com and collect all these tickers. Now, this is just the indices. Well, I've got a whole lot more for commodity prices, economic theories, and stocks themselves, and all of that. So once you put this in, you can expand this. This is shift alternate right arrow. You can contract it, and then you just go upstairs and you press read all. And I hope it's not going to break. If it is, well, all I have to do is stop the video. And then I am not even, so far I haven't stopped the video. And it just read in the data. And here's what it does. Once you do this, it puts the two pieces of data right here. It puts the closing price, adjusted close, and all that. And it did it for our two things. So far it worked. That's pretty good, isn't it? And you could, of course, enter as many as you want. And what I had done before is clear all the sheets. So let's say tomorrow, you want to get tomorrow's stock price or something. Well, this is, first of all, I should say, I've done this monthly. You could do it daily, or you could do it in a different time period. And if you did this, you would have to go up and adjust this here from month. You'd have to adjust it, and I should be much better to show you. Put WK for weekly or D for daily, I believe. I should really know that, but I don't. I shouldn't have admitted that. So now let's say, okay, we want some other indices. Now the other place to get a whole bunch of data is from this Federal Reserve economic data. Yeah, it's U.S., but it has a whole lot of stuff. So in here, I'm going to, this time we need a sheet name, and I'm going to get the NASDAQ, and I'm going to use the little code number, and I'm going to get the same thing. I'll just call that the sheet name too. Just a minute. I'm going to call this sorry. This should be the description. Okay. And then look at me. I'll say this. And then this is the only one I'm going to get. This time, it goes to the Fred economic database, and I had to press F9 that time to shift F9. And this time it puts that new data into a different file. And here's the only problem. There are a couple of problems. First of all, there's some data that's missing. Secondly, if I want to read this quickly, it kind of takes a little time. So it's Shift Control F. And what that does is it just kind of puts the stuff together. So it does, you can kind of see where it comes from, and you can get a fancy looking thing. Now, once you have this finished, okay, I've got a couple of things entered, okay, I can then, first of all, I'm going to recalculate. And I'm going to have to recalculate everything. Ah, God. Okay. Then it puts our three series here. Excuse me. I'm going to put it back to manual. I meant to press F9. And then I'm going to press false to all. And what that does is it initially here's what it does. It just takes everything away. Now, what you want to do when you start this whole thing, process, okay, I don't have to show what we're on, 10 minutes already. Okay, I'm going to select as my kind of basis the S&P 500. I got to select that. I could select something else. And then I'm going to go all the way back to the beginning. The reason I like to select the S&P 500 is that's got a whole lot of dates. That's going to kind of set the dates for us. And it goes all the way up. Oh my gosh, look at this stock price increase. And it also correctly just takes one series. I used to have a whole bunch of NAs here. And then if I'd like to compare that to the DAX and to the NASDAQ, okay, then it's going to do it for us. And it should have been faster than it just was. And I got to make sure it's still on manual. Okay, and then it says, oh, no, here they both started about the same time, but so we better start in 1988, because if we don't have the starting points correct, we can't do this. So we can look at really long-term analysis or short-term analysis. That wasn't so hard. Okay, it's going, I think, a tiny bit slowly. And here's what happened is the NASDAQ dramatically kind of outperformed everything. Of course, we had this enormous bubble, and now it's kind of going crazy again. This is kind of interesting that where the DAX outperformed the S&P 500 in the U.S. And if we do it like this, now here's a problem. There's a big problem. DAX is when you download the DAX, it's in euro. It's not in US, so you're not really comparing it. So we're going to have to make some sort of adjustment for this now. So we've done Yahoo index and Fred index. Now, to get these kind of things in, okay, what you do is you put here, and I'm going to kind of cheat. The exchange rate sheet is really important. You can use this to get things like the exchange rates and inflation rates, and you can deflate. So let's say we want to look at the stock market in real terms, not in nominal terms. Now I'm kind of cheating. I just put a couple of codes here, and then I'm going to put the sheet names a little bit different than the codes. These are again from the Federal Reserve economic data. I have got some other things. If you look at one of those things, if you go to Fred, if most of you have probably done that before, and I'm going to copy it down a little bit. Shift F9 to get it. Shift F9 works. I see an F9 doesn't. So I'm going to get the GNP. I should get GDP, really, I suppose. And I'm going to get the GDP deflator, two deflators, and I can get a deflator to divide things, or I can get exchange rates and all of this. And just like all the others, I'll go and then I'll read this data. And it'll put it in new separate sheets. Okay? And by the way, while it's reading here, I'm going to leave it. It doesn't take that long. It really didn't take that long, did it? If you look at this page on the website, it goes through page by page almost exactly what we're doing. It says here, there was the NASDAQ, and there's what we're doing in putting the inflation in, and we've got some inflation indices and all that now. Now, once you have those in, okay, well, the first thing I suppose I better do is press the calculate now thing. Did that work? I hope it did. If it didn't, we'll see, because it did. It put all these additional series in. Okay? Now, here's what we could do. Let's do one simple thing first. Let's take the DAX away. and just look at the S&P 500, and maybe we'll go all the way back to the 1950, and then we can, that took a second, and now I can just put this up, and I can, right now there's a IRR. If you invested, this is kind of one of the little things about life, is compound interest makes a big difference. 7.81%. And if we look at this, if we look at 1957, I don't know why I would start in 1957. Well, that's when I started. I didn't say that, and then let's say I started in 1957 was a bad time to start. Oh, this is giving now the IRR in without inflation. That's about 3%. You would have made about 3% above inflation. 1976. Let's start in 83. Okay. 5% above inflation now. That's pretty much. Okay. You can. That's enough to get you rich. It really is. Okay. So that's 6% inflation. Of course, it depends on the starting point, and that's pretty good that we've shown you that. Okay. Enough. Now, if I put the DAX here, okay, and now I'm going to start. Well, I can leave it as there. It says, that started in 1987. But if I wanted to do this, I'm going to first put this back down. And now, what happens here is the first two are always should be in inflation, because you're going to divide by the inflation index. And then if you have it stated the exchange rate in USD divided by the other currency, okay, then you're going to multiply the DAX. So now I can put this in euro. I got a little bit of a problem. The euro didn't start till about 1999. So let's start this in 2000, which is a horrible time to kind of start this, because it kind of happened after maybe I'll start it in 2002. Okay. So right now, this DAX is converted. The DAX right now is converted into euro. If we didn't convert, it's converted back to US. I said that incorrectly. If we didn't convert it, I have to press this little recalculate button. It was 7.7 before, and it's only 5.84. You can see that conversion kind of stuff could make a big difference. And if you have stocks that are stated in a different currency, that'll help you out, I hope. Okay, and that's some economic index. Now let's, and I think I did the inflation. Let's just look at that other thing we got. We got the GDP, and I'm going to now take away the DAX. I hope you can see how easy it is to just click on these buttons. Okay, and and this is kind of dramatic. Now, there are a whole bunch of other economic series you can get. I don't know, that's a horrible English. My English is getting so horrible. You can compare this to corporate profits, and here, I didn't want to deflate this or anything like that, so now I'm going to just compare. And again, I should have said that everything stated as an index. And this is what's so interesting to me, how the kind of stock market grew kind of boring way with the GDP, and then it had these amazing kind of runs. And now, can it really grow that much faster than the GDP forever? And you could make some arguments, oh my gosh, the stocks is per share and all this, and the GDP is aggregate growth. And I'm not claiming everything's perfect or anything like that. Don't worry, okay? All right. Okay, so that's the economic series and the exchange rates. Then the next thing you can do is you could compare things to oil prices or gas prices or something else. Let's put the title of the series. How about we'll compare it to Brent, and then I'll put this code in, and then I press F9, oops, Shift F9, and it kind of takes, that first thing takes the brackets away. Okay, and let's also compare that to, how about we compare it to, not hides, gasoline, corn, all of these kind of commodity prices. You could do this whole thing just with coffee, just if you wanted to start doing an analysis only of commodity prices instead of stock prices. There's the metal index, coca. I'm looking for just boring old copper. Why, I probably have passed it up. Rice in Thailand, zinc. Come on. Beef, cotton. Come on. Coal, iron ore. How about iron ore then? Fine. Oh, there it is. It's much earlier. It was 32. So, okay. So I put this is these Fred indices, and I'm pressing Shift F9. Now I have just two different indices I'm going to look at. And like the other ones, I just press this one and press Read Commodity Prices. And then I put all that stuff in. And then I'm going to have to recalculate the whole. Puts in our Henry Hub. Okay, it looks like we have prices of oil only since 1987. So I can't. If you want to get older prices, you can actually get it from that World Bank database. It's in another sheet. Okay, so and then you can kind of see what's the volatility of the growth rate, the volatility of stocks versus commodities, what's happened. Look at the kind of correlation between the oil and the copper. That's kind of what I wanted to show you. Now you could start the whole thing with the price of oil and just do a whole bunch of comparisons of oil to copper and everything else. So we're getting there. So we've done commodity prices, and now let's do the final one, which is to get stocks. Now, I've just collected a whole bunch of stock prices for different industries, This is some oil company, and I don't know what is this. Some miscellaneous companies, some telecommunication companies, some insurance companies, and some Facebook companies, and all that stuff. So I'll put the sheet name here, and let's make the sheet name the ticker symbol, and I'll then put a company name. So that's again just for our, and I'm just going to get a few stocks. Now what this does is I press Shift F9. Let's get Facebook too. How's that? Okay, since I mentioned it. And once you do that, you can clear all the sheets again, and then you just read all the stocks. And this one, uses, it uses this thing called web request, which you can kind of see on the top there. So it's reading the file. The first one takes a little bit of time, I suppose, and then it should be kind of finished now. Yeah, so it's finished. So this, just like those indices, it puts here's the GE and the Google and the Amazon and Facebook, and then you can do a little bit of your stock price thing to see what in the heck's going on. So what I'm doing is here, I'm putting false to all. Okay. And then I'm going to put in, I gotta calculate everything first, and then when you calculate it, it'll put in some of the, okay, so, let's take GE. Now, GE began in 1962. If I go all the way back to 1962, gosh, the return on GE was just incredible. Okay, but now it's really come down. You can see, go all the way back to the beta. If you go all the way back to 62 is this, but if we go to 2002, okay, the beta is 1.33. I'm trying to show you that even with an old stock like this, let's go back to 2007, and then our return isn't so good, and the beta went up to 1.48. So these betas can be all variable. Okay, maybe the industry's changing and all that stuff. Okay, now how about let's compare Google, and Google began here in 2004. So let's see what happened to Google. And my lesson with Google is that this is a stock that has done very well. If you invested one in 2004, well, perhaps we should start in 2005, really. You would have got, if you invested 1,000, you got 12,000 today, something like that. But that return is only 21%. So when somebody says they need these really high IRRs, are they real? Now let's look at this one. Let's look at let's include Apple, and then we can't even see the rest of the stuff, I think. What happened to Apple? Oh, I guess Apple has a different color. You notice how it, well, whatever, of course you notice how it changed. And we can go back with Apple. Perhaps let's go back to kind of before the big crash now. And then let's also look at Amazon. So there's Apple. Oh my gosh. Now you did get Apple a 27% return. Oh my gosh. Now that includes their crap years, and but you can not even see the rest of it. And then let's look at Amazon. Okay, and I think, and then Amazon just blows everybody away. They get 33%, and look at that. You got to decide what's going on. Is this a bubble? What's their earnings? Is this real? Can they really support this stock price? I think it's a fascinating question. I don't want to get into all this crap about what Amazon does and how unique they are and all this crap. I want to look at their returns and see if their returns really can be sustained and compare them to other retailing kind of entities and look at their growth and all of that. And that's what we're going to do in demonstrating the next database. So I hope one person tries this and then emails me and says, God darn it, this stupid thing didn't even work. Okay, enough of this video.